Hey everyone, so in this video I'm going to go through 5 ETFs that you can buy and hold forever for long-term investors. So these are all ETFs that I've personally looked into and I personally added to my watch list. And in this video I'll break down the companies included in this ETF, the reasons why I like them, and the gains over the past couple of years. As you guys are probably already aware, I am a long-term investor and I do like to invest most of my money into ETFs. So then I don't really have to worry about trying to time the market and I can just dollar cost average into my investments over a really long period of time and take advantage of compound interest. And by the way, before we get into this video, I did want to mention that I'm not a financial advisor and this is not financial advice or professional advice for that matter. So it is really important that you do your own research before you invest in anything. So with that said, let's jump into the video. So the first ETF on my watch list is NDQ, which is the BetaShares Nasdaq 100 ETF. And NDQ aims to track the performance of the Nasdaq top 100 companies. It includes 100 of the biggest companies on the Nasdaq. The top holdings in this ETF are Apple, Microsoft, Amazon, Facebook, Google, and Tesla. And here are the reasons why I really like this ETF. The first reason is the top companies in this ETF are some of the biggest and best companies in the world, in my opinion. And I think that they all have really great long-term growth potential. And actually, a lot of the top companies in this ETF are personally on my watch list. So I feel very comfortable investing in this ETF knowing that I have done my research into these individual companies and I personally would be happy to make an individual investment into these companies. And knowing that they're all grouped together as part of this ETF makes me feel even more comfortable because my risk is more diversified. And that brings me to the second reason why I like this ETF, and that is that my risk is diversified. And since my risk is diversified, I don't have to worry too much about when I'm going to buy this ETF because I am just dollar cost averaging, which means I am making regular investments into this ETF over time. So the returns on NDQ have been approximately 21% since its inception in 2015. And I don't know about you, but those are some really good returns, especially for an ETF. And I know that past performance doesn't really indicate future performance, but it is really awesome to see that this ETF has been a really consistent performer over time. The management fees for this ETF is 0.48% or $4.80 for every $1,000 invested. And by the way, if you're enjoying this video so far, make sure you give this video a like and turn that button blue. Turn it blue like me. So make sure you like this video so we can continue with the next ETF that I really like. So the second ETF on my watch list is Asia, which is the BetaShares Asia Technology Tigers ETF. And this ETF gives you exposure to 50 of the largest tech companies in Asia, excluding Japan. And the top 5 biggest holdings in this ETF are the Taiwan semiconductor manufacturer, which I didn't really know what semiconductors were, but they actually are the little chips that live inside our computers and phones. The second biggest holding is Meituan Dianping. I really butchered that name. I'm so sorry if there's anyone watching who is Chinese and they just heard me say that. Really sorry about that pronunciation. And this one is a Chinese shopping platform. And then there's also, of course, Alibaba, which is the massive e-commerce tech giant of China. And I personally really like Alibaba as a business. As you guys may already know, I do have my own false eyelashes company, and all of the stock that I do buy for my false eyelashes brand is actually all sourced from Alibaba. And when I first started looking for products to sell, I was just amazed by the range of products available on Alibaba and the prices. So if you haven't already checked out Alibaba and you are thinking of starting your own side hustle, I think that Alibaba is such a great business. Definitely check it out. And the next one is Tencent, which I think most of us would know what Tencent is. So this is the company that also owns TikTok. And of course Samsung, and we all know what Samsung is, a really massive tech giant as well. So here are the reasons why I really like this ETF. So the first reason is the top companies in this ETF are all really solid companies. I personally really like Tencent, Alibaba, and Samsung, and I think that these companies have some really great growth potential as well. The second reason is because I think that Asia as a continent also has a lot of growth potential in the future, especially in the technology space. And there are so many big tech companies in Asia that have really thrived over the last couple of decades. And I can only really see them performing and growing even more than they are today. So I think that there is a lot of growth that will come out of Asia in the next couple of decades. So the management fee for this ETF is 0.67% or $6.70 for every $1,000 invested. So the main countries in this ETF are China, Taiwan, South Korea, India, and Hong Kong. And I would love to know what your thoughts are of this ETF down in the comments, and also NDQ as well. What are your thoughts on the current ETFs on my watch list? Because I would love to know. And if you haven't already subscribed to this channel, make sure you do subscribe for more videos about investing and personal finance. I do produce some really regular videos about this type of content, so if that's something that you're interested in, make sure you subscribe. It would honestly mean the world to me and I would really appreciate it. So the third ETF on my watch list is ETHI, which is the BetaShares Global Sustainability Leaders ETF. And this is one of my favorite ETFs, and it's personally an ETF that I have invested in. So the reason why I like this ETF is it has some really great global companies including Apple, Nvidia, MasterCard, Visa, and Home Depot. And it also is an ethical ETF, so that means that BetaShares have screened out a lot of the companies that people deem unethical, including gambling, tobacco, alcohol, and mining. So here are some of the reasons why I really like this ETF and why I've personally invested in it. So the first reason is that it's an ethical ETF. And I feel really good knowing that I'm putting my money where my values are. I personally really believe in trying to take as much action as we can on climate change. So I feel good investing in this ETF knowing that these businesses are contributing to some sort of sustainability goals. And the second reason why I really like this ETF is I think that all of the companies in this ETF have really great long-term potential as well. And most of the companies in this ETF I've personally added to my watch list, so I feel quite confident investing in this ETF knowing that it's investing in these companies. And I also do think that ethical ETFs and ethical investments will only get more popular with time. As the governments start to introduce more sustainability goals, I think that this will help these businesses thrive even more in the future. And the third reason I like this ETF is that it's a global ETF. So this means that I'm getting exposure to not just companies inside the US, but also around the world as well. So the returns for ETHI have been approximately 20% per year since its inception in 2017, which is just mind-blowing because those are some pretty decent returns, especially for an ethical ETF. And I think it really does go to show you that ethical investing does have that stigma that you can't make good returns if you are making ethical investments. And I think that ETHI really does blow that out of the water because this ETF has made some really decent returns over the past couple of years. The management fees for this ETF are 0.59%, or $5.90 for every $1,000 invested. So the fourth ETF on my watch list is IOO, which is the iShares Global 100 ETF. This ETF contains 100 blue chip companies across the globe, and the top 5 biggest holdings in this ETF are Microsoft, Apple, Amazon, Alphabet or Google, and Johnson & Johnson. And most of the companies in this ETF are either in IT or health. So here are the reasons why I like this ETF. So the first reason is this ETF, since it is a global ETF, it is very well diversified. So there are companies in this ETF from the US, Europe, and Asia. And the second reason why I really like this ETF is it contains 100 of the biggest global companies. The management fee for this ETF is 0.4%, or $4 for every $1,000 invested. And over the past 5 years, this ETF has had returns of about 10% each year. So the fifth ETF on my watch list is the iShares MSCI Global Impact ETF, or SDG as the ticker code. So this is another ethical ETF, and all of the companies in this ETF are all contributing in some way towards the UN's social and environmental development goals. So here are the top 5 biggest holdings in this ETF. So there's Tesla, Umicore, AbbVie, Vesta Wind Systems, and Procter & Gamble. And here are the reasons why I personally like this ETF. So the first reason is I'm really passionate about climate change, and I really do want to try and make sure that I'm doing the best job that I can for future generations. So investing in ethical ETFs is something that I really want to do, and especially ETFs and businesses that are doing great things but are also really, really solid businesses as well. I think that with our investments, we can do both. We can have a positive impact on our future, and we can also invest in really amazing businesses that can give us really great long-term performance. And the second reason is I really like the companies that make up this ETF, particularly Tesla and some of those other high growth companies. I think that renewable energy is a space that will really grow over the next couple of years. So personally, I feel very comfortable investing in ethical ETFs and ethical funds, because I also do think that where the world is headed, there will be a lot more people looking at investing in ethical companies. So the management fees for this ETF is 0.49%, or $4.90 for every $1,000 invested. So the ETF was launched in 2016, and over the past 3 years it has had returns of 10%. And it is important to know that past performance doesn't indicate future performance. And it also is important to note that this ETF in the past year has gone up like crazy, I think because of the big stake that it has in Tesla stock. So that's why I think it's really important to have a look at the individual companies that make up an ETF, because that can really drive the return on investment that you can achieve from your ETF investments. So thank you so much for watching this video. I really, really appreciate it, and it means the world to me. If you did like this video, make sure you give this video a like and turn that button blue like me. And if you haven't already subscribed to this channel, make sure you subscribe for more videos about investing and personal finance. And if you'd like to see some more videos, I've put some links to some videos here, so make sure you click through the links and check out these other videos.